Hey everybody, Chuck Barone. It's Tuesday, August the 28th, 2023, 29th, 2023. And we are rolling into the end of this month pretty quick. And the end of this quarter going to happen really fast because, September is going to start. So is the NFL. And once NFL starts, man, boom, you blink your eyes, it's Christmas. Anyway, markets today just going crazy. We knew today was going to be a kind of a quiet day. I have a lot of interesting stuff to talk with you guys about today. Getting set up for the big couple of days coming up at the end of the week. But the market's feeling buoyant today, man. Stock market up, bond market, up. Excellent day for people in their investments today because pretty much everything was up. An interesting day. So the stock market today, tech leads the way. Jumps up, man. Nice numbers on the stock market. The Dow up 292 points, 34,852. The S&P up 64 points, 4497. And the Nasdaq jumps 238 points, 13,943 on the Nasdaq. So great numbers across the board for the stock market. The tech stuff and Nasdaq up nice. The broader market, a nice jump for S&P. The Dow obviously had a great day today. So here we go. We'll see if we can keep these gains now. We've seen a lot of this where we head fake city, where it's up and then boom, right back down. So we'll see if we can sustain this rally in the face of some of the data we got coming later this week, right? The bond market rallies today again. 10-year yield falls 9 basis points. Boom. 4.12% on the 10-year. And the 2-year falls 12 basis points. 4.89% on the 2-year. I gotta say, guys, I don't know who's scooping up all these bonds here, but amazing these kind of rallies. The bond market is usually a place that's quiet. Not big moves up and down every day in yield. Usually things are pretty steady in the bond market. It's where money goes to sleep, right? Anyway, fancy day in stocks and bonds across the board. Everybody should be happy today, right? The dollar today down more than half a point on the index, 103.41 on the dollar. Of course, nothing significant that I saw that should cause the dollar to move up or down today, but these markets are going to trade. As a result of the weakening dollar, though, precious metals had a great day today. Gold jumped $17.70. Gold now sitting at $1,937.30 for an ounce. Not a bad price. I mean, gold moving up nicely. You're going to see it round that 2,000 number again real soon. And silver jumps 50 cents an ounce today, sitting at $24.70 now, right there on the cusp of breaking 25 again. So good numbers for gold and silver today. Oil today also rallies, up $1.14 per barrel, sitting at $81.24 for a barrel of West Texas Intermediate. Not a bad couple of days for oil. And we're like everything else, we're going to see if this is in any way sustainable. I didn't see anything really today that should have drove oil higher or lower. And Bitcoin really had a day today. Bitcoin jumps $1,879, sitting back well above 27,871. So a rally in Bitcoin. And I know a lot of you guys watching this show are owners and holders of Bitcoin, so good for you guys. I think be patient with that. You're going to see a bump. And you haters out there, well, it's still not as great as it once was, right? All right, let's talk about news today because there's a couple interesting things I want to talk about. First thing was just a preface to what's coming later in the week with the jobless claims. The Department of Labor puts out their Jolts today, and U.S. job openings. This has been a big controversy, right? 2 jobs for every person looking for one. Well, now the Department of Labor reporting that job openings are starting to fall pretty significantly, falling by 338,000 in July. Now we're down to 1.5 jobs, 1.5 jobs for every person looking for one. The Jolts report comes from the Department of Labor. They're saying that right now there are 8.8 million job openings in the U.S., and that's the lowest number of job openings that they've reported in more than 2 years. So the labor market starting to slow a little bit. Still pretty robust, though, with 1.5 jobs for everybody. I mean, if there was just a job for everybody, if it was legit, and there was a job for everybody that wanted one, that'd be a good thing, right? With more than one job for everybody looking for one, now you should see wages going up, which are trickling up, but not the companies that are giving raises. You see the bottom lines on those companies, they've really jumped pretty nicely. But anyway, job openings. So this is, I don't know if this is a little bit of foreshadowing for what will come later this week, but I thought it was interesting, wanted to share it. Another interesting little tidbit I saw today. Well, consumer sentiment came out, and the experts were expecting 116 on the index, came in at 106. So consumers feeling a little more negative. You know, it's just like everything else all over the map. Last month it was, wow, consumers feeling a lot better. This month, wow, consumers not feeling so great. But I think this might be why. I was reading this interesting article saying that consumers are starting now to really fall behind on their payments. Credit card new delinquencies. Okay, so these are not people who are chronically late. New delinquencies jumping 7.2% on credit cards in the second quarter. And new auto loan delinquencies jumped 7.3%. So more people having difficulty making their payments on time for credit cards and cars. Both of these levels now well above pre-pandemic levels, pre-COVID stuff. That's kind of the measuring stick. Here's where we were before COVID. You know, we're trying to get back to that level of normal in our economy and our government. And obviously not quite there right now, right? Americans starting to borrow money now that they can't pay it back. Can't pay it back. So you're starting to see these delinquencies jump, consumer sentiment turning sour. And I was reading this other thing that was interesting. It was saying that consumers are actually masking their debt. Okay? So we already know credit card debt over $1 trillion. But it really masking it because what they're doing is they're borrowing money, say a home equity line of credit or some other type of debt consolidation loan, paying off all of their credit cards. Now they got a payment on that debt consolidation loan to make, of course. But when you stretch, you know, your credit card payment out over 30 years, it gets significantly smaller. You still owe that principal, right? And so consumers doing these consolidations, and then right away, most of the time within 90 days, right back where they were on their credit card debt. Just going now, well, you got zero credit card, nobody can have that, right? Going up, running credit card debt up like crazy. When you see credit card debt at $1 trillion, see car loans off the charts, man, a $700 average payment now. Almost 20%, 17% of car loans above $1,000 per month. I mean, what do you expect, man, when you see payments like this? And now, starting Friday, interest starts right back up on student loans. Student loan payments start back up. They're already falling behind on credit cards. They're falling behind on auto car their car payments. What in the heck's going to happen on these student loans? And student loans are kind of weird because they're considered government debt, federal debt, like taxes would be. So if you're delinquent on your student loans, it's almost the same as being delinquent on your taxes, at least in the eyes of the government. Because you know what? If you're delinquent on your student loans, you don't qualify for a mortgage. You got to get those loans up to date. So it's just crazy. Consumers, I hope it all works out, man. You know, the people who've been listening to me on this show, this is not what we've been doing, right, guys? This is not what we've been doing. What we've been doing is trying to lighten the load on our debt load, not taking on new debt, chipping away at our existing debt. I've seen a lot of people in comments talking about making their last credit card payment, making their last car payment, making their last payments, and not taking on new debt. That's the way, man. Buying your freedom. Because not having debt is the only way to have real freedom. If you borrow money, if you're owing big amounts of money, and you're a slave to those payments where you got to work every week just to make payments, and you're not really getting ahead, that's no way to live, man. So hopefully you guys have been following what we've been saying. You're saving your money. I mean, people who've been listening to this show, you know, we've been on about, I don't know, 16 months now or so, 15 months. You know, they've been stashing some money away, 10% of their pay, right? So, you know, in 10 months, you got a paycheck stashed. And most people, I shouldn't say most, a lot of people are not saving money. So hopefully you are, and you know, you're out of your debt is down, and you're not sounding like one of these people, because what they're in here is a cycle of doom, financial doom, that usually ends in bankruptcy court, man. And that's when, you know, we don't want to be there. Another interesting little tidbit I saw today, I wanted to share: the Oracle, Warren Buffett, dumping stocks like crazy. Selling $8 billion so far this month, $33 billion so far this quarter. Buffett lightening up his stock portfolio. Now, this is typical of what he does, man. When he sees storm clouds on the horizon, he starts dumping. He takes profit, and he leaves that powder dry for the big opportunities that he knows are coming. So be really cautious, guys. You know, if Buffett's selling and not buying, I mean, he's not 100%, but he's the closest thing you're going to find in this market to a really decent indicator of what he thinks at least is going to happen. I can't think of a more successful investor, especially over the long term, like him. So this is a guy who knows how to keep his powder dry. I guess Berkshire is sitting at $147 billion in cash. Wow. So there's going to be opportunity coming. He sees it. He's increasing his cash positions so that when those opportunities do present themselves, guess who's going to be first in line to cash in? Old Warren Buffett is. And lastly today, guys, we'll talk about Powell here. You know, the Fed. I was kind of surprised because Powell been telegraphing everything he's going to do, kind of letting the markets know, and I think that's worked well. But I was reading today, they were saying that Powell now is likely to start keeping the markets in the dark. Talking out of both sides of his mouth, like he did at Jackson Hole this past weekend, at Friday, his big speech. And they said the reason for that is to keep his options open. Because if he sounds too hawkish, right, that tanks markets. If he says we're going to pause, wow, the markets go crazy celebrating, it's all over, they think the fight is won. So, you know, he's been presented with the idea where he kind of has to keep things kind of mysterious, I guess, or I don't know, vague or uncertain, because this is a guy that has to set himself up for success, and you don't want to be tipping your hand at this point, especially here at this point, where things seem to be going his way, but the Fed is loath to declare victory early and have a big spike and look like a bunch of dumbasses. And they don't want to be spooking the markets more than they need to. And you got to say that, so far, our economy here in the U.S. doing better than most of the economies in the world. So we'll see how they manage this, the mythical soft landing. I got to see it. As you know, I'm a little more bearish than most. But interesting stuff today. So remember, guys, labor market tightening, consumers falling further and further behind, up to their friggin' eyebrows in debt, Buffett dumping stocks, and finally, Powell, the mystery man, who will no longer be telegraphing exactly what the Fed's going to do, making the uncertainties in the market even more uncertain. Fascinating times, guys. Anyway, that's it for the day. We'll be back again tomorrow to bring you guys the news you need. As always, we're grateful for your support. We appreciate you guys watching these videos, showing up every day for us. I hope that you guys are getting something useful out of the show and using the information we're passing along to your best advantage in these markets. Anyway, guys, that's it for the day. We'll be back tomorrow. Till then, take care.